SoundHound AI stock has become one of the most talked about investments in the market today. Of course, that's coming on the back of the rising effectiveness of artificial intelligence, and the AI investing trend continues to be the hottest investing trend in 2024 after being the hottest trend in 2023. So in this video, I'm going to go over a few of the reasons why I think everyone is talking about SoundHound AI stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the reasons why I think so many investors are interested in SoundHound AI stock is because of the massive opportunity ahead for this innovative audio technology company, this audio AI company. The CFO says that they're addressing an opportunity that's greater than 100 billion and it's growing. So their opportunity, their total addressable market is 100 billion and growing. And so with their revenue being a small fraction of that number, you can see it's got a massive opportunity ahead for growth and a long runway, to be sure. In the third quarter, the company mentioned that their cumulative booking backlog was 341 million, with automotive being their largest topic, their largest constituent. Now, automotive is, of course, the best match here with SoundHound AI's technology, being that you're in a car, you can close the windows, and the audio technology can work really well inside the car. And when you're driving, your hands are busy most often, you're holding the steering wheel, so you'd prefer to communicate by using your voice instead of having to take your hands off the steering wheel and touch things to get the response you want from the car, whether it's turning on the radio or changing a song on your playlist, whatever it might be. You'd prefer to communicate that to the car with audio rather than having to touch things and search things while you're driving. And so in the fourth quarter, their revenue was up 80% to 17.1 million. You can see that large gap between where their revenue is and the total addressable market opportunity. So their revenue comes predominantly from automotive royalties, with strong increase in units that were offset by decreases in average selling prices due to a higher volume of edge licenses that generally have a lower royalty than their cloud licenses. Now in their third quarter, they had higher unit volume and higher average selling price. So in the fourth quarter, one of those two factors changed course. It was higher and higher, now it's higher and lower. You'd prefer both of them to be higher, but at least one of them is increasing. And if one of them, if I was to choose which one is increasing, I'd prefer the units increasing rather than the average selling price increasing when I'm dealing with a company that's just getting started penetrating these massive market opportunities. Because, for instance, with its automotive partners, it may penetrate one automotive company with one model. Let's say you're working with Honda and you make a deal for being in the Honda Accord. So you're willing to take a lower price on that deal because you're hoping that you serve Honda, that relationship, so well that Honda wants to expand your service to all its models, not just the Accord, but the Civic, the Pilot, the CR-V, all of its models across the board you want to be able to penetrate. So you're willing to have lower price initially to get in, and then you expand. So the company saying that they think there's meaningful opportunities for unit price expansion. So for now, they're going with the lower price, but they think there's huge opportunity, meaningful opportunity for unit price expansion. Over the full year in 2023, they increased their auto units by 68% and active cloud users by 55% versus the prior year. Solid growth, to be sure. And more impressively, they did this while decreasing expense. R&D expenses were 12.7 million in Q4 with a decrease of 41%. Sales and marketing expense were 4.5 million, a decrease of 34%. Due to, remember earlier in 2023, SoundHound AI announced some restructuring, some cost-cutting efforts. Those are starting to pay off. As I mentioned in the previous quarter update. Now that's continued, and it's more impressive to me. And I say this a lot with companies that I'm following. It's more impressive to me when a company can grow revenue while decreasing costs, because it's always easier to increase revenue by increasing costs, right? Think about it. If I increase advertising, if I increase marketing, that's likely going to boost revenue. If I hire a dozen more salespeople, that's probably going to increase revenue. If I offer a lot more promotions and spend money on promotional activities, that's likely going to increase sales. But to decrease all of those categories and still increase sales, that's truly impressive. That demonstrates organic demand for your product, strong organic demand for your product, because their revenue increased by 80%, 80%, while decreasing expenses by 34% in sales and marketing and 41% for research and development. So I was impressed with this, and undoubtedly this is one of the reasons why so many investors are talking about SoundHound AI stock. So their operating loss in the fourth quarter came down to 12.4 million, which reflects an improvement of 57% year over year. That's a combination of increasing your revenue while decreasing your cost, driving leverage in the business, and operating loss of just 12.4 million. If it continues on this pace, the company could be profitable in a couple of years. Now, management said they're going to be profitable on adjusted EBITDA basis in 2025. So they're expecting this trend to continue for the next couple of years, although management also said that while they want to grow profitably, their priority is to grow. So if that means that they need to sacrifice profits in the near term to capitalize on growth, they will do that. But from what we saw in the latest quarter, they capitalized on growth and they improved profitability. They did both. Investors got the best of both worlds from SoundHound AI in their latest quarter. So hopefully they continue to deliver more of that in the upcoming quarters as companies worldwide jump over themselves to implement artificial intelligence because of the increasing productivity you get from your current expense structure, but also because of the increasing effectiveness in serving your customers. AI has the potential to better serve your customers while also decreasing cost. And so that's where artificial intelligence is gaining so much popularity, is because it's offering a win-win environment for enterprises and consumers alike. And that's creating a surge in investment in artificial intelligence, not just from stock market investors, but from businesses investing in artificial intelligence to incorporate it into their business operations, because the return on investment is so much in favor of making that decision. So here, I think those were several reasons why I think a lot of investors are talking about SoundHound AI stuff. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.